Hello. For those of you who have already joined, thank you. We're just going to hang on for a couple of minutes to let other participants join the webinar today. Thanks. Okay, we still have some joining, but let's get started. So if we could go to the next slide, please. So hello, welcome everyone, and thank you for participating in the third and final of our three-part series, 5000 in Focus. For those new to the webinar series, I'm Josephine, I'm the Vice Chair of the IAASB, and I also chaired the Sustainability Task Force. Now, before I kick off the webinar today, I do want to let you know that it will be made available to you along with the slides after the presentation. Now, our webinar series takes us through 5000 from engagement acceptance, assessing risks and designing performing procedures, and finally to concluding and reporting. Now, each webinar includes an explanation of 5000 with practical implementation insights. And today I'm presenting alongside Neil, Claire, Kazuko, and we're also joined by our other stars of the webinar, Dan, Susan, and Taylor. So if we could move to the next slide, please. Thank you. So as I say, in the first webinar, we covered the foundational principles and concepts, as well as accepting or continuing an engagement. In the second webinar, we covered planning, risk and response, and we also talked about some of the strategies in approaching the engagement, particularly for group engagements. Now, in this third webinar, we'll be covering forming a conclusion, finalizing the engagement, and expressing a conclusion and preparing the assurance report. Now, as we go through the topics, if you have any questions, please type them in the Q&A box during the presentation, and we will respond to as many as we can as we go through the webinar. As I've mentioned in my previous webinars, we're here to explore the overarching principles. We won't be discussing the detailed workings of any particular firm's approach or methodology, but we do recognise that the practical guidance can be developed from these broader discussions, and we will keep your questions in mind as we consider further guidance. We could move to the next slide, please. Great. So before we kick off and start discussing the requirements related to concluding and reporting and forming a conclusion, it's probably worth taking a moment to remind ourselves of what we are setting out to achieve when carrying out a sustainability assurance engagement, and repeating the basics on how the conclusion comes about. This is probably useful for those just starting out in the world of assurance, the students, but I will keep it very brief, recognizing, of course, that many of our participants are professional assurance practitioners and have a greater understanding already. So if we could go to the next slide, that's great. So the purpose of the engagement, or any assurance engagement, is to enhance users' confidence about the sustainability information being reported. It's their sunshine, if you like. And this is achieved by the expression of a conclusion by the practitioner, the basis of which requires the practitioner to achieve either reasonable or limited assurance. Now, reasonable or limited assurance is achieved when the practitioner has obtained sufficient appropriate evidence, and that's either to reduce assurance risk to an acceptably low level for reasonable assurance engagements, or to reduce risk to a level that's acceptable in a limited assurance engagement. And we did discuss assurance risk in webinar 1. Now, this evidence is gathered through various assurance procedures that we also covered in 1 and 2, designed to uncover any misstatements, which are differences between the sustainability information being reported and the evidence obtained. Let's think about an example. So a company claims in its sustainability report to have 95% waste diversion rate from landfills to composting facilities. However, the evidence from waste hauler invoices show that some additional waste, including general rubbish and some composting items, was actually sent to a landfill and not diverted as claimed. That brings the 95% down quite a bit. So the discovery and the evaluation of this misstatement are a direct outcome of that evidence gathering process. Now, the practitioner will then assess the misstatements for materiality, and if they are material, will work with management to correct them. The final assurance conclusion, whether unmodified or otherwise, is the ultimate conclusion drawn from all the evidence obtained and the impact of any remaining uncorrected misstatements on the sustainability information. This webinar is going to cover these important steps to forming the conclusion, as well as some important reporting requirements. But that's going to be it for me for now, and I'm going to hand over to Neil, who's going to do a deeper dive into sufficient appropriate evidence and the evaluation of misstatements. Thank you, Neil.
Thank you, Josephine. I like the example that you used, and we'll see if we can build that example into the rest of the slides as we work through this topic. So, sufficient appropriate evidence and whether uncorrected misstatements are material are interrelated. And in order to conclude, the practitioner is required to evaluate the sufficiency and appropriateness of the evidence obtained and determine if the uncorrected misstatements are material. So when we work through the slide, the practitioner gathers evidence, may identify misstatements. The practitioner accumulates uncorrected misstatements, determines if they're material, evaluates the sufficiency and appropriate of the evidence obtained. This may lead to a revision of the risk assessment if you're doing a reasonable assurance engagement, or identifying that further evidence is needed in a limited assurance engagement. You need to chase down a potential misstatement because something's come to your attention before you're able to conclude. If necessary, you obtain that further evidence, which may lead, in addition, to further uncorrected misstatements. Now, practitioner considers these new misstatements. We'll talk about the communication and correction of those a little later. And then you sort of considering whether you got sufficient evidence and so forth. And until you're satisfied that you've got sufficient evidence, and you can then conclude whether the sustainability information is free from a material misstatement. The level of assurance will impact the sufficiency and appropriateness of the evidence necessary to conclude. I mean, that's in order to reduce engagement risk to an appropriate level for limited assurance, or an appropriately low level for a reasonable assurance engagement. And then the practitioner can form a conclusion, which we'll touch on later. So that's a bit of a mouthful. Let's see if we can get into a bit more detail on the next slide. So in evaluating the sufficiency and appropriateness of the evidence, the practitioner needs to evaluate whether the evidence obtained actually meets the purpose of the procedures. Professional judgment and exercising professional skepticism is certainly needed in evaluating this evidence. They also need to consider all the evidence obtained. I mean, even if it's inconsistent or other evidence or it contradicts with the disclosure, in order to avoid just falling back on confirmation bias. So if the evidence is not sufficient or appropriate, further evidence is going to need to be obtained. What's sufficient and appropriate evidence overall in limited assurance engagement ordinarily would be substantially less than what would be equivalent for a reasonable assurance engagement. Ultimately, if the practitioner is unable to obtain sufficient appropriate evidence, a scope limitation may exist, and Kazuko will be talking about how to report a scope limitation later. Now, judgments and decisions made by management and assumptions used in preparing the sustainability information, such as for estimates or forward-looking information, may be susceptible to management bias. Now, indicators of management bias can be future performance-based. They're optimistic assumptions that may not likely be achieved, such as forward-looking information in an entity's transition plan for emissions to reduce those targets, and using assumptions about the availability of renewable energy sources that might just not necessarily have been developed in that area. Perhaps the infrastructure isn't even available. So where there is an intention to mislead, management bias would be fraudulent in nature. And here I'd refer you to the application material 417 for further examples of misstatements that could arise from error, process flaws, management bias, or fraud. If the practitioner suspects fraud, they need to obtain an understanding of the matter and further information to evaluate the possible effects on the sustainability information. Discuss the matter with the appropriate level of management or those charged with governance, depending on who may have been involved. The practitioner then evaluates the implications, takes the appropriate action. Now, these actions may include requesting the entity to consult their legal counsel or regulator, as well as the practitioner obtaining their own legal advice. Let's have a look at the next slide, please. So I'll now turn to the accumulation and consideration of identified misstatements. This can be broken down into 5 steps that I'll go through now. The 3 steps for which 5000 has specific documentation requirements are marked on the slide. So firstly, the practitioner must accumulate the identified misstatements. Other than those that are clearly trivial, that have been identified throughout the engagement. Clearly trivial misstatements are not simply misstatements that are not material. They're described in paragraph A470 as a wholly different, smaller magnitude or wholly different nature than those that may be considered material. They're clearly inconsequential, whether taken individually or in aggregate, and whether judged by any criteria of size, nature, or circumstance. If the misstatements may be due to fraud, the practitioner needs to take the specific action that I mentioned when we discussed the evaluation of evidence on the previous slide. Next, the practitioner considers those identified misstatements. So the nature and circumstances of any misstatements identified may indicate that other misstatements exist, such that if they are pervasive across disclosures or the entire report, or may indicate that accumulated misstatements may be material. So we used Josephine's example earlier about the overstated diversion rate. Because the invoices show that a certain amount of waste, including some recyclables, was actually sent to landfill, this could be indicative of other overstatements and may trigger the practitioner to revise their approach to the engagement. Those misstatements, they could be related to control deficiencies, for example. So key internal records for tracking waste streams, maybe they're inconsistently filled out across different locations, making the company's own aggregated data overstated. And the practitioner may need to update their understanding of the entity's system of internal control, consider where further procedures are needed on disclosures subject to those controls. Okay. Thirdly, the practitioner then communicates with management. As I mentioned earlier, we'll get to this. You communicate with management and request them to correct the misstatements accumulated. Whether that's in rewriting qualitative disclosures or updating the quantitative disclosures. For those misstatements that management does not agree to correct, the practitioner seeks to understand their reasons and determine whether it's indicative of bias and ultimately will be relevant in concluding on misstatements. Now, in our example, after presenting these findings, company management would hopefully agree to recalculate, and that's mostly been my experience. They recalculate the waste diversion rate using accurate data on all facilities and revise the reported figure downwards. The assurance practitioner would also likely report the deficiency of the internal control to management. Okay. Next, the practitioner may consider the need to revise materiality prior to evaluating the effect of the uncorrected misstatements. And Obtaining more evidence may also be necessary when you find a misstatement. So the practitioner may decide that the findings indicate that they need a lower materiality threshold and perform more extensive testing. This could include expanding the sample size to other distribution centers, conducting more in-depth reviews of internal waste tracking documentation, perhaps performing interviews with a wider range of employees. And then finally, the practitioner determines whether uncorrected misstatements are material by considering the size, nature, circumstance of the occurrence of the misstatement to conclude if they are material. The aggregation will be considered if the misstatements are not material individually. I'll cover this in more detail shortly. So I guess one of the things you might be wondering is, the frequency that you would have for necessarily changing and revising materiality. So when we were discussing this, I think I generally don't find that revising materiality is that common. In the current environment, we're largely performing limited assurance engagements, and we tend to just chase down that misstatement. We often find that it's typically isolated from other metrics. So it doesn't tend to have a pervasive effect on other metrics, which would have their own materialities, and therefore the re-evaluation of materialities in the current environment, I find isn't as frequent as one might think, but certainly is available as one of the responses that you might make when identifying a misstatement. If we can have a look at the next slide, please. So the practitioner is required to determine whether uncorrected misstatements are material individually or in aggregate. Now, we covered aggregation and disaggregation of disclosures for planning and performing the engagement in webinar 2. And aggregation of disclosures for evaluating the misstatements may be more focused on matters such as the nature of the disclosure or the units of measure and the information needs of users. I mean, as we explained in webinar 2, it's not usually possible to aggregate disparate disclosures in a sustainability assurance engagement. Although, if it is raining misstatements, then the direction of the misstatements or the trend might be material when considered together across the sustainability information. Offsetting of over and understatements may be possible, but only when the misstatement is in the same measurement. So maybe within scope 1 GHG emissions, for example. But it may not be possible when you've got separate disclosures that are required by the framework. So this evaluation necessitates the application of professional judgment in the context of the criteria and the engagement circumstances, including who the intended users are, what disclosures they're likely to be important to them. You may consider some of the questions on the slide in evaluating whether the misstatements are in fact material. The implementation guide, I think, also provides some helpful material on this evaluation. And we can go to the next slide and we can provide some simple examples for this discussion. So here are a couple of simple examples of how uncorrected misstatements can be aggregated for different sustainability matters. So aggregated misstatements related to sustainability information measured using a common measurement basis. So tons of carbon dioxide might be an example of how you could accumulate or aggregate. And then group the misstatements together if they relate to a common topic of sustainability matters. So you practitioner may be able to group misstatements in occupational health and safety and employee diversity as they're both social topics. So there's a bit of a stretch, but you might be able to get there within the topic. For example, if you have a waste diversion misstatement that we've spoken about, that's a quantitative environmental measurement versus human rights policy misstatements, which is a qualitative social metric. You might find it's difficult to aggregate for a material assessment under those circumstances. However, you might be onto something important, right? You might find that there's a pattern of overstatements across topics. And this could indicate a bias or systemic issues, which I mentioned a couple of slide backs, and then the practitioner may need to update their understanding of the entity system, of internal control, consider if there are further procedures that are needed on the disclosures sort of subject to those controls. So that's a sort of a different angle of how you're accumulating, where you're just considering whether there's a trend, a theme around how the misstatements are landing. I'm now going to hand over to Claire, and she's going to talk about finalizing the engagement.
Thanks so much, Neil. So yes, I'm Claire Grayston. I'm the IAASB's Sustainability Assurance Lead, and I note there's a number of matters that need to be addressed in finalising the engagement, and so I'm going to cover those now. Next slide, please. So following on from evaluating the sufficiency and appropriateness of evidence and the materiality of uncorrected misstatements that Neil explained, there are a number of matters that the practitioner needs to address in finalising the engagement. I set those out on this slide. So firstly, the practitioner needs to read and consider the other information in order to respond to any inconsistencies or misstatements that appear to exist, so that the practitioner is not associated with any false or misleading information. Now, I'll come back to the work that needs to be done on other information in more detail shortly. Secondly, the practitioner must determine whether the comparative information is appropriately presented and include an other matter paragraph in certain circumstances. I'll also come back to what this means in terms of work effort on comparatives and how to report on the outcomes of that work. Thirdly, the practitioner evaluates the description of the applicable criteria to identify whether the sustainability information adequately references or describes the applicable criteria and the sources of those criteria. It is a precondition of the engagement, as we discussed in webinar 1, that the criteria be available to intended users of the sustainability information, and this applies regardless of the framework or other criteria that the entity applied. If the entity is applying a recognised framework, they may simply reference that framework in the sustainability information if it's publicly available and readily accessible. But for entity developed criteria or maybe frameworks that are not publicly available, the entity may include a description in the sustainability information or use a link to where the criteria can be found. The purpose of the entity making the criteria accessible is so that the intended users can understand the basis for the practitioner's conclusion, including how the content of the sustainability information, such as the topics or aspects of topics, has been detailed and selected for disclosure in the sustainability information, how the intended user's information needs are identified, and specifically how their sustainability matters have been measured or evaluated. Without knowing the framework or criteria that have been applied, users may misunderstand or misinterpret the sustainability information. For example, if there are significant deficiencies between criteria applied by entities in the same industry, sorry, I meant differences with the other entities in the industry, the sustainability information may not be directly comparable. So when users might expect that information to be equivalent, they need to understand that it might be differently measured or evaluated under different criteria. The standard provides a detailed list of considerations for the practitioner in evaluating the description of the criteria, and this is provided in paragraph A501, and I mention that because I won't go into the whole list of matters that we do provide in the standard. But those considerations could include, for example, whether the applicable criteria are framework criteria embodied in law or regulation or issued by an authorised or recognised organisation following a transparent due process that provides, the users with confidence in that framework, or other framework criteria or entity developed criteria that have been used, which need to be described by the entity. The practitioner may consider how the determination was made to use other framework criteria or entity developed criteria. And if there are applicable framework criteria that are not applied, why they haven't been. The description of criteria needs to provide a clear meaning with sufficient detail and clarity to be understandable and not contain imprecise or qualifying language that may result in inconsistent interpretation. So in webinar 1, we also explained the difference between fair presentation and compliance frameworks. To address this difference, when the sustainability information is prepared under a fair presentation framework, the practitioner is required to do additional work to evaluate the overall presentation, structure and content of the sustainability information. This is a matter of professional judgment to identify if any additional disclosures are needed to achieve fair presentation arising from matters that could be material but not disclosed. It may include discussions with management and those charged with governance to obtain their views on why a particular presentation was chosen, whether the presentation of disclosures obscures or clouds useful information, the consistency of disclosures with appropriate industry practice, or whether any departures are relevant to the entity's circumstances and therefore warranted. Next, procedures need to be performed to identify subsequent events up to the date of the assurance report that may affect the sustainability information and the assurance report, and the practitioner evaluates whether such events are appropriately reflected in that sustainability information. These procedures may include inquiries of management, reading minutes of meetings of those charged with governance held after period end, or reading the entity's monthly or quarterly sustainability information release. Subsequent events identified may include developments such as discovery of a significant fraud or error, or a significant environmental impact caused by the entity, such as perhaps water pollution or soil contamination, or a health and safety matter resulting in injuries or fatalities. They could also include changes to relevant legislation or regulations, or publication of revised factors by a government agency that may have a significant impact on the entity's reporting of sustainability information. So these are the types of subsequent events that the practitioner will consider in determining whether they need to be addressed in the assurance report. If facts become known after the date of the assurance report being issued by the practitioner, that had they been known at the date of the assurance report may have caused the practitioner to amend that report, then the practitioner may need to discuss the matter with management or those charged with governance, or take other appropriate action. However, I note, in ISSA 5000, the practitioner does not need to conduct procedures to identify such events. It's if they come across those. Finally on this slide, oh sorry, not finally, quite finally, but the practitioner is required to request written representations from management and those charged with governance. And these matters that they must obtain those written representations on are listed in ISSA 5000 in paragraph 165. Those representations include matters such as the effects of uncorrected misstatements are immaterial, significant assumptions used in making estimates and preparing forward-looking information are appropriate, and both deficiencies in internal control and fraud or non-compliance with laws or regulations that could have a material effect on the sustainability information have been disclosed. So there's some of the key representations that are required. The practitioner may also request further representations to support other evidence obtained. And it's worth noting that written representations are not sufficient appropriate evidence on their own. So they need to be supported by other evidence. If there is sufficient doubt about the integrity of those providing the written representations that are required, such that those representations are not reliable, or the written representations are not provided, the practitioner is required to disclaim a conclusion on the sustainability information or withdraw from the engagement. but we'll be coming back. Azuka will be talking about conclusions a bit later. So the final responsibility of the engagement leader is to fulfill, need to be fulfilled prior to the dating of the assurance report. So all of these particular matters need to be covered off first. So I'll come back to what those specific responsibilities are in a couple of slides. Can we have the next slide, please? So now moving on to the practitioner's responsibilities with respect to other information. So other information is the information reported in the same document as the sustainability information subject to the assurance report. For example, a sustainability report might be included in the entity's annual report. If the entire sustainability report is subject to the assurance engagement, then the other information in that case would be the financial statements and the auditor's report on the financial statements, any management commentary, corporate information, or anything else included in the annual report. If the sustainability information subject to the assurance engagement is only part of that sustainability report, such as, for example, the climate-related disclosures only, and the other sustainability disclosures were not assured, then that sustainability information would also be other information. So the purposes of the requirements relating to other information is to avoid the practitioner being associated with false or misleading information, even though that information is not within the scope of the assurance engagement, but it's simply reported alongside it. False or misleading information may include information provided recklessly or information that omits or obscures the required information. In that case, the sustainability information would be misleading. The practitioner's ethical obligations require the practitioner to not be knowingly associated with such information. The practitioner is required to obtain the other information, firstly, read it and consider it, respond to possible inconsistencies or misstatement, or if a material misstatement is identified. So now I'll just step through what this actually entails in 4 stages as set out on this slide. So the other information is identified by discussing with management the documents that are expected to be issued with the sustainability information and when they're going to be available. Because the practitioner needs to make arrangements to obtain the final version of the other information in a timely manner on or before the date of the assurance report so that they can complete the required procedures on that information. ISSA 5000 only requires other information, as I mentioned on the previous slide, obtained prior to the date of the assurance report to be read and considered. So secondly, in reading the other information, the practitioner is looking for any material inconsistency between the other information and the sustainability information, or the practitioner's knowledge obtained during the assurance engagement. And also any indications that the other information is itself materially misstated. So, for example, in a scenario where the practitioner is providing limited assurance over energy efficiency improvements disclosed in the financial year 2025 sustainability report, the company claims in the report that they implemented only low-cost operational changes to reduce energy use in financial year 2025, and that no major capital expenditures were made as part of this initiative. The practitioner, in this case, obtained evidence to support this by reviewing invoices, procurement records, and site visit logs. They confirmed that only minor retrofits and process changes were implemented, which supported the sustainability report disclosure. But in the audited financial statements, on the other hand, under property, plant and equipment, the company disclosed that in the financial year 2025, the company capitalised $4.5 million of assets relating to its energy efficiency program. The asset note classifies this as sustainability-linked plant upgrades and equipment. So this other information appears to be materially inconsistent with the claims in the sustainability report. So what does the practitioner do about it? If a material inconsistency appears to exist, or the other information appears to be materially misstated, the practitioner is required to discuss it with management. If they're not satisfied with any explanations provided, they perform other procedures to conclude whether a material misstatement of the other information or of the sustainability information exists. In our scenario, the other information of concern is the financial statements. So then the practitioner would seek to communicate with the auditor, unless prohibited by law or regulation or professional requirements, to bring the auditor's attention to the possible inconsistency or misstatement. Of course, the information that the auditor provides could help them establish whether it's the sustainability information or the financial statements that is materially misstated. If the practitioner concludes that a material misstatement of the other information exists, so in this case, the financial statements, but management or those charged with governance do not correct it, they consider the impacts on the assurance report and may consider, in extreme cases, withdrawing from the engagement. If, on the other hand, they conclude that the material misstatement of the sustainability information exists, then the practitioner will respond to the material misstatement, as Neil explained, by requesting that management correct the misstatement, and if they refuse, then consider the impact on the assurance report, which may well be the need to modify the report or, again, withdraw from the engagement in more extreme circumstances. And that might be appropriate, for example, if the integrity of management or those charged with governance is cast into doubt. Next slide, please. The practitioner's work with respect to comparative information can be explained in these three considerations on the slide. So the practitioner firstly needs to determine whether the framework or other criteria require the entity to present comparative information in the sustainability information that is subject to assurance. If comparative information is required by the criteria, ISSA 5000 sets out the practitioner's responsibilities relating to such comparative information. So this slide is premised on the comparative information being required by the criteria. The practitioner must address these three matters on the slide if this comparative information is required. So firstly, looking at the blue box on the left, this is addressed in ISSA 5000 in paragraphs 207 to 208. The practitioner determines whether that comparative information is appropriately presented by evaluating whether the comparative information is consistent with the disclosures presented in the prior period, and any inconsistencies are addressed in accordance with the criteria. And the criteria for measurement or evaluation of that comparative information are consistent with those applied in the current period, or if there have been changes, and of course criteria may change between periods, whether those changes have been properly applied and adequately disclosed. So that applies to all comparative information. Secondly, so we're now looking at the middle box of this slide, the mustard coloured box. This is addressed in ISSA 5000 209 to 210. This matter centres on whether the comparatives are referred to in the assurance conclusion or not. This is important because if the comparative information is specifically referred to in the practitioner's assurance conclusion, for example, they say the sustainability information for the year ended December 31st, 2025 and 2024, so it's covering the previous year's sustainability information, users will read that as a conclusion on both the current period information and that comparative information for 2024. This is opposed to a situation where the practitioner's conclusion only refers to the current period information. That is, the conclusion is read as a conclusion on the current period information only, which also includes comparative information that is simply part of the current period information to be read as it relates to and in the context of current period information. Bearing in mind that the procedures in the blue box will have been conducted on those. If the comparatives are not referred to in the assurance conclusion, ISSA 5000 identifies certain circumstances that must be highlighted to users that are fundamental to their understanding of that comparative information vis-a-vis its presentation as part of the current period information. Having done the procedures explained in that blue box, the practitioner will include an other matter paragraph. This paragraph states that the comparative information was not subject to an assurance engagement. If it was not subject to assurance engagement, if that is the case, makes a statement. If, however, the comparative information was subject to an assurance engagement in the prior period, in the other matter paragraph, the practitioner states that fact. And also, if the engagement in the prior period was conducted by the same practitioner, that the assurance engagement for the prior period, if it had a different level of assurance or a different engagement scope than the current period, a statement in the other matter paragraph is made. Alternatively, if the engagement was conducted by a predecessor practitioner, the other information states that fact and the type of conclusion provided. If the conclusion was modified, the reasons for any modification, and the date of that report. So that's all of the information needed in the other matter paragraph if the assurance conclusion does not refer to the comparatives. Now, if the comparatives are referred to in the assurance conclusion, then they'll be subject to the assurance procedures during the engagement, which we talked about in webinar 2. For example, if the comparatives were assured by the practitioner in the prior period, so they've done that engagement for 2024, the procedures in the blue box may be sufficient, so that comparing the consistency of the comparatives to the prior period sustainability report and making sure the criteria are consistent with the current period's criteria. So that may be sufficient if they conducted the engagement in the prior period. On the other hand, if the comparatives were assured by a predecessor auditor, then the practitioner may consider using the work of the predecessor practitioner and treat them as another practitioner. Again, we talked about using the work of another practitioner in webinar 2. Requirements with respect to another practitioner will then be applied in order to place reliance on that work that they did on the prior period comparative information. If the comparators were not assured in the prior period at all, the practitioner may need to conduct further procedures in obtaining sufficient appropriate evidence on those comparatives. The third matter to be addressed are in the green boxes on the right-hand side of this slide. These are addressed in ISSA 5000 paragraph 211. If the practitioner becomes aware that there may be a material misstatement in the comparative information, irrespective of whether the comparatives are referred to in the practitioner's conclusion, the practitioner is required to discuss that with management and perform procedures appropriate in the circumstances. In order to conclude whether or not the comparatives are materially misstated, and if applicable, the practitioner performs work normally required for an identified misstatement. So they're the same sort of requirements that you do with any identified misstatement, and then considers the effect on the assurance report. In addition, if the practitioner has determined that the comparative information presented in the entity's sustainability information is materially misstated, the practitioner is also required to consider whether the practitioner information has been restated. as reported in the prior period. So in this case, if the 2024 figures had been misstated, have they now been restated? If they're not restated, then the practitioner's conclusion, where it does not refer to the comparative information, then the practitioner is required to include an other matter paragraph that describes the circumstances affecting the comparative information. On the other hand, if the practitioner's conclusion does refer to the comparative information, and we talked about having 2025 and 2024 information, in these circumstances, the practitioner expresses a qualified or adverse conclusion in response to the material misstatement of that other information, comparative information. And Kazuko will come on later to discuss these modifications. Next slide, please. Now, we talked about the engagement leader's responsibilities for quality management at the engagement level in webinar 1. So now, prior to dating the assurance report, the engagement leader has a number of specific responsibilities for engagement quality management. I'll not go into these responsibilities in too much detail as they're fairly self-explanatory, but it's important to remember that the engagement leader takes overall responsibility for managing and achieving quality, and so needs to be satisfied that they've fulfilled these responsibilities. So I'll start with the sufficient appropriate involvement of the engagement leader. So the engagement leader needs to satisfy themselves that they have been sufficiently appropriately involved throughout the engagement. In order to determine that significant judgments made and conclusions reached are appropriate, and the assurance report to be issued will also be appropriate. This would include the engagement leader's involvement in consultation on difficult or contentious matters, and confirming that conclusions agreed have been implemented, and resolution of differences of opinion have been made. The engagement documentation should also evidence the engagement leader's involvement throughout the engagement. If the engagement leader is not sufficiently involved, you might see a lack of timely review by the leader of the engagement planning or risk assessment procedures performed, or those to whom tasks or actions or procedures have been assigned may not have been adequately informed, perhaps about the nature of their responsibilities and authority, the scope of the work assigned, or the objectives not being provided. Or you might see the engagement leader not having given direction and supervision to other members of the engagement team, and maybe didn't review their work sufficiently, or that it simply was not documented. So the second responsibility for the engagement leader is that they are required to determine that sufficient appropriate evidence has been attained through review of the engagement documentation and discussion with the engagement team to support the conclusions reached, and of course for the assurance report to be issued, and to determine that the report issued is indeed appropriate. The engagement leader is also required to determine whether relevant ethical requirements, including independence, have been fulfilled by the engagement team, and when using the work of others. The engagement leader must determine that any changes to the engagement or the firm's related policies and procedures have been taken into account in applying 5,000, in addition to taking into account the policies and procedures, appropriate actions that the engagement leader may take in response to changes in the engagement might include, for example, updating or changing the engagement plan, reevaluating the planned approach to the nature and extent of review, and modifying the planned approach to increase involvement in the engagement leader. So reviewing more extensively the work, for example. Consulting with personnel assigned operational responsibility for relevant aspects of the firm's system of quality management. So there's a number of ways that they may change their approach in response to the changes in the engagement. The engagement leader is also responsible for documentation, and I did mention documentation briefly, and this needs to be in place for both, particularly for the engagement leader's determination that they've been sufficiently appropriately involved in the engagement team's work and the work of others, and their determination that sufficient appropriate evidence has been obtained to support the conclusion and the assurance report. So those two aspects are key to support the evidence that the engagement leader has taken overall responsibility for the engagement. If the engagement is subject to an engagement quality review, the engagement leader is required to make sure that review has been completed prior to signing the report.
Hi, Claire, it's Josephine, just wanting to pick up on that point as I saw this coming up on the slide. Would it actually be worth talking about a little bit about where our engagement quality review guidance is? Because this is probably the first time we've touched on this in our webinar series.
Yes, that's true, Josephine. We haven't touched on this previously. And what you'll find is that the trigger for an engagement quality review on an engagement is included in ISQM 1. So, our core firm quality management standard. And ISQM 1 does set out the circumstances when an engagement quality review should be conducted, when a reviewer should be involved in the engagement. And then we have a standard that you're absolutely right, we haven't mentioned yet in this series, ISQM 2, and that sets out the requirements for that engagement quality review.
Yeah, that's great. Thank you. And as part of those ISQM 1 requirements, which are the trigger, as you rightly point out, firms may decide that they would like engagement quality reviews to be carried out on certain engagement, even if it's not in the required list under ISQM 1 as well.
Yeah, thanks, Josephine. Okay, so moving on from the engagement leader's responsibilities then, so I'm going to hand over to Kazuko to talk about expressing the conclusion. Thanks, Kazuko. Next slide.
Thank you, Claire. I am Kazuko Yoshimura, a senior manager at the IAASB. I will be covering expressing the conclusion and the last part of the assurance engagement, preparing the assurance report. Having formed the conclusion and addressed the matters outlined in finalizing the engagement, we will now look at how the conclusion is expressed. Next slide, please. If the practitioner is unable to obtain sufficient appropriate evidence, then a scope limitation exists. As there is a lack of sufficient appropriate evidence, this means that there could be undetected misstatements in the disclosures for which evidence could not be obtained, or across the sustainability information if those disclosures are pervasive. A scope limitation may arise from circumstances beyond the control of the entity or the practitioner, such as they cannot get access to evidence from a value chain entity over which the entity does not have operational control, or the scope limitation may arise from the nature or timing of the practitioner's work, such as if the operating effectiveness of controls cannot be tested during the period as the practitioner was engaged too close to year-end. The limitations may be imposed by management or others at the entity that may prevent the practitioner from performing a procedure that the practitioner considers to be necessary in the circumstances. If the possible effects of the scope limitation are not so material and pervasive, then the practitioner is required to issue a qualified conclusion. However, if the possible effects of undetected misstatements could be both material and pervasive, so that a qualification of the conclusion would be inadequate to communicate the gravity of the situation, then either a disclaimer of conclusion is required to be issued, or the practitioner would withdraw from the engagement, if possible, under applicable law or regulation. Withdrawing from the engagement may not be possible if the practitioner is required by law or regulation to continue the engagement, such as for an appointment for a public sector entity assurance engagement. There may also be a professional, legal, or regulatory requirement for the practitioner to communicate matters relating to the withdrawal from the engagements to regulators or shareholders. How those modified conclusions are described in the assurance report will be explained later. Next slide, please. If the practitioner identifies uncorrected misstatements, but they are immaterial, either individually or in aggregate, then an unmodified assurance conclusion can be issued. If the misstatements are material but not pervasive, then the practitioner is required to issue a qualified conclusion. Or if the effect is both material and pervasive, then an adverse conclusion is issued. How those conclusions are expressed will be explained in the next segment on the assurance reports. For example, the entity has omitted certain disclosures that are required by the framework and will be material to intended users, because their systems were not in place to enable management to reliably estimate the amounts needed for those disclosures. This would result in a qualified conclusion. However, if the omission has a pervasive effect on the entity's sustainability information, then the practitioner would need to issue an adverse conclusion. Next slide, please. Now that we covered expressing the conclusion, we will move on to preparing the assurance report. Next slide, please. As Josephine said at the start, the purpose of the engagement or any assurance engagement is to enhance the degree of confidence of the intended users about the sustainability information being reported. This is achieved by the expression of a conclusion by the practitioner, the basis of which requires the practitioner to achieve either reasonable or limited assurance. It is the assurance report that conveys this. Therefore, it is important to communicate effectively, and ISSA 5000 has some key principles to preparing the assurance report. Assurance report is to be provided in writing, clear communication, especially the practitioner's conclusion about the sustainability information needs to be expressed clearly. We don't want to mislead or cloud the user's understanding. I will touch in more in detail on the description of different types of conclusions in the next slide. The standard does not require a standardized format for reporting. Assurance reports are tailored to the specific engagement circumstances. If you see the right-hand side of the slide, you will find basic elements ISSA 5000 requires the assurance practitioner to include in the assurance report. Those are what is required as a minimum by the standard. Some items to note on the basic elements are the type of conclusion. This differs depending on the level of assurance. For limited assurance, it will be limited assurance conclusion, and for reasonable assurance, it will be reasonable assurance opinion. In the same manner, the basis for conclusion will be basis for conclusion for limited assurance and basis for opinion for reasonable assurance. Furthermore, for limited assurance, ISSA 5000 requires to state in basis for conclusion section that the procedures in the limited assurance engagement vary in nature and timing from and are less in extent than for a reasonable assurance engagement. And consequently, the level of assurance obtained in a limited assurance engagement is substantially lower than the assurance that would have been obtained had a reasonable assurance engagement being performed. Both limited assurance and reasonable assurance are required to have a section, practitioner's responsibilities, and in that section to briefly describe the procedures performed. In a limited assurance engagement, in addition to that, summary of work performed section that contains an informative summary of the work performed as a basis for the practitioner's conclusion is required. For limited assurance, The level of assurance that is considered meaningful in the circumstances may vary for each assurance engagement, so an appreciation of the nature, timing, and extent of procedures performed is essential for the intended users to understand the conclusion expressed in the limited assurance report. Next slide, please. I explained earlier how practitioners reach to a conclusion. In this slide, I will touch on how those different conclusions may be described in an assurance report. I will start from the left-hand side of the table and move on to the right. You can find related requirements and guidance in the standards as well as in the implementation guide. So, unmodified conclusion. Sometimes we call it as a clean opinion or conclusion. This is expressed when the practitioner is satisfied that they have obtained sufficient appropriate evidence and they have not identified any material misstatements that remain uncorrected or that any uncorrected misstatements in aggregate are not material. To clearly express this in a limited assurance engagement, the conclusion will state in a negative form that nothing has come to the attention of the practitioner, and in a reasonable assurance engagement, in a positive form, that the sustainability information is fairly presented when the framework criteria is fair presentation, or sustainability information is prepared when the framework criteria is compliance criteria. Negative form in limited assurance conclusion reflects a lower level of assurance than reasonable assurance because of the limited nature of procedures performed. Now moving on to qualified conclusion. Qualified conclusion is expressed when a scope limitation exists or when the sustainability information is materially misstated and the effects or possible effects of a matter are not so material and pervasive. A qualified conclusion is required to be expressed as being except for the effects or possible effects of the matter to which the qualification relates. The example in the slide is referring to the matter in the basis for qualified conclusion or opinion section, since when expressing a modified conclusion, it is required to provide a description of the matters giving rise to the modification in the basis for conclusion or opinion section. Now, moving on to disclaimer. When scope limitation exists and a disclaimer of conclusion is expressed, the conclusion will express that the practitioner has not obtained sufficient appropriate evidence to form a conclusion. Moving on to adverse. When there is uncorrected material misstatement and an adverse conclusion is expressed, the practitioner has concluded that the sustainability information is materially misstated. The example in the slide clearly states that the sustainability information does not present fairly when the framework criteria is fair presentation or not prepared in accordance with the framework criteria, but the framework criteria is compliance criteria. When considering about different types of conclusions, it is also important to note that practitioner's conclusion is formed on the sustainability information that is subject to assurance as a whole. For example, the practitioner will not express unmodified conclusion and at the same time express adverse conclusion for a certain part of the sustainability information for one limited assurance engagement. The practitioner will express either one of the conclusion from the table. Next slide, please. In this slide, I will go through 3 different paragraphs. Inherent limitations in preparing the sustainability information, emphasis of matter, and other matter paragraphs. These paragraphs are not always required, and the assurance report will include the paragraph if applicable. Each has its own purpose, so I want to highlight what the differences are. Inherent limitations in preparing the sustainability information section is where the assurance practitioner describes any significant inherent limitations associated with the measurement or evaluation of the sustainability matters against the applicable criteria. This includes inherent limitations related to forward-looking information included in the sustainability information. As a heading says, in preparing the sustainability information, inherent limitations described in this section are those encountered by management in preparing the sustainability information. Emphasis of matter paragraph. This is included if the practitioner considers it necessary to draw intended users' attention to a matter presented or disclosed in the sustainability information, that in the practitioner's judgment is of such importance that it is fundamental to intended users' understanding of that information. Other matter paragraph is included if the practitioner considers it necessary to communicate a matter other than those that are presented or disclosed in the sustainability information, that in the practitioner's judgment is relevant to intended users' understanding of the engagement, the practitioner's responsibilities, or the assurance report. For example, the practitioner may need to include other matter paragraph in relation to their work on comparative information. There are example descriptions of inherent limitations in preparing the sustainability information section and emphasis of matter paragraph in the implementation guide.
Kazuko, thank you. It's really important to emphasize, no pun intended there, the differences between these paragraphs. Is there anything though the practitioner should be aware of when they're actually preparing them?
Yes, Josephine. So these paragraphs are not a substitute for a modified assurance conclusion. Emphasis of matter paragraph and other matter paragraph have to clearly indicate in the assurance report that the practitioner's conclusion is not modified in respect of the matter. And inherent limitations encountered by management in preparing the sustainability information also may affect the nature or extent of the practitioner's procedures. And the practitioner may also choose to describe the effects on the practitioner's procedures in the inherent limitation sections of the report, but that does not reduce the practitioner's responsibility to obtain sufficient appropriate evidence, and it should not be implied by the description in the inherent limitation section.
Yeah, and that sort of rings true to the point you made earlier on the examples of conclusions. You can't pick and choose different conclusions for different aspects of the sustainability information. It is one unmodified conclusion or modified conclusion.
Yes.
Yeah, Zuko.
Thank you. Next slide, please. Okay. So it is not possible to explain all the details or different ways of preparing the assurance report in this webinar, even if we had all the time. However, there are some additional considerations which are worth highlighting. ISSA 5000 is a principle-based standard which is intended to be suitable for sustainability assurance engagements for any entities, regardless of size or complexity. And there are only a few requirements related to assurance report that is specific to certain entities, such as public interest entities or listed entities. And except when the practitioner disclaims a conclusion, and if the practitioner has obtained the other information by the date of the assurance report, Claire mentioned on this, ISSA 5000 has requirements on what to include in the assurance report. Also, there may be additional reporting responsibilities for the practitioner. For example, in addition to practitioner's responsibilities under ISSA 5000, the practitioner may be required to provide a conclusion relevant to compliance of the sustainability information with the digital taxonomy. For engagements are not all created equal, so there will be situations where the scope of the engagement is narrower than the entire sustainability information being reported. Or experts may be engaged by the practitioner, and law or regulation may require the practitioner to identify the expert. They can not, however, give the impression that they have relinquished responsibility for certain work to the expert. Dual assurance reporting is not something we are aware of yet, but it could be a possibility those familiar with audits of financial statements will know that sometimes you have to report in accordance with ISSA and the jurisdiction's auditing standards combined. It's not ISSA 5000 minus any requirements, though. It's just that a practitioner may have to apply both. So you can find a lot of guidance on these in the standard and in the implementation guide. I also want to inform you that we are currently developing illustrative assurance reports as a supplemental guidance. So please stay tuned. Now with that, I will hand it back to Josephine. Thank you.
Oh, thank you, Kazuko. That's great. So we're going to take a little bit of time, just if I could have the panel back to answer some of the questions that came through, which we appreciate. But actually, just on that last point, Kazuko, you did talk about upcoming guidance on assurance reports. Perhaps you could tell our participants what exactly is going to be included there. That would be helpful. Thank you.
Yes, Josephine. I'm very happy to share about what we are currently working on. So we are developing a supplemental guidance for illustrative, that includes illustrative assurance reports. And we are planning to have 5 modified and 3 modified reports. For the people who have seen the illustrative assurance reports in the standard, you will find that those are more on the basic side. But since what we are working now is a supplemental guidance, we are trying to develop something more specific and have specific fact patterns. For example, we have a combined limited and reasonable assurance engagements, or a fact pattern using the entity reporting based on multiple reporting frameworks. So I hope that helps. Thank you, Josephine.
Thank you very much. I'll just pick up one question that came through a couple of times, which was in respect to the slide you had on practitioner's signature. So that was basic elements to be included. And the question was, is it sufficient to disclose only the name of the practitioner's firm or company? Now, in the standard, the requirement for the practitioner's signature relates to the firm, but it's really important to note that in some jurisdictions, law or regulation may require the name of the engagement leader to be included. So we have the basic foundation in our standard, which it's the firm, but do check in your own jurisdiction what's required. 5000 requires the name of the engagement leader for listed entities, of course, unless in rare circumstances such disclosure is reasonably expected to lead to a significant personal security threat, which was actually what the participant was really concerned about. Now, if you want to look a bit further into that, if you look at paragraph 191 of 5000, that will actually give you some more information. So hopefully that's been helpful. But again, do remember you need to look first to what's required in your jurisdiction. Neil, I know we're going back a bit, but you were talking about deficiencies in internal control, and we haven't really talked much about those. But if you had reported deficiencies to management, say in the previous year of your engagement, what would you actually do with that in year 2? Because it's not a misstatement, is it? So I've got a couple of questions on that. Thank you.
Josephine, absolutely. I mean, I think taking into account the experiences you've had in the prior year would absolutely impact your risk profile. So the particular question you ask is around control deficiencies. Yep, I do think that deficiencies in that control environment need to be incorporated into your risk profile for your year 2 engagements. Similarly, misstatements. So if you've had an experience of a number of misstatements in a particular area, that's definitely going to impact your approach. Conversely, what I think practitioners do need to understand is if the prior year hasn't had deficiencies in control environments, doesn't have material misstatements being identified by their procedures, then I really would challenge them to also consider the positive impacts that might have on their engagements in the current year, and perhaps changing the risk profile down in those areas would be appropriate based on the experiences you've had in the past.
Yeah, of course, that makes sense. Thank you so much. So Claire, I have one for you actually on the other information, which I think we actually had either in webinar 1 or webinar 2. So it's probably worth raising again. So it comes in as a sustainability assurance practitioner in respect of other information. Am I now supposed to understand the depths of financial reporting requirements?
Oh yeah, thanks, Josephine. So the short answer is no. The assurance practitioner for sustainability information needs to have the competencies and capabilities set out in 5000, which focuses on assurance capabilities and also sustainability knowledge. So no, the practitioner does not need to have particular expertise in financial reporting. But I'll just point out that, you know, this is obviously a question relating to the other information, and the evaluation of other information is very much based on the practitioner's reading of, if the financial statements are in that other information, reading that and seeing what they believe is an inconsistency with the sustainability information, and or also potentially, you know, a misstatement in the other information. So for example, the practitioner also has knowledge obtained on the engagement that they would consider relating to the entity more broadly. And look, for example, the financial statements might have some assumptions, you know, that are related to the sustainability information, and the practitioner looks at those and says, well, hang on, that doesn't align with with the assumptions that we looked at. Perhaps for, you know, forward-looking information or estimates that have been used in the sustainability information, so that, you know, very much challenging those and looking at whether they represent a material misstatement, perhaps in either the financial statements or the sustainability information. So, yeah, so it's not about having, you know, detailed knowledge of financial reporting, and that's not the responsibility of the practitioner.
I suppose for those who are auditors on the webinar today as well, it's the same the other way around too. So whichever way that you're looking at it. That's great, thank you. And just while we're on that, one came through earlier, which was really, are the financial statements still other information if the two reports, say a financial report and the sustainability information, are issued in completely different points of the year?
So again, the short answer is no, that's not other information, in that we define other information as the information reported, you know, with the sustainability information. So in the same report or set of reports. So so that wouldn't be something that needed to be read and considered. Of course, you know, if the practitioner did decide to read that and came across something, then of course that's up to them to want to take that up if they're worried that it's you know, maybe being misstated, but no responsibilities in the standard to do that.
Okay, great, thank you. Neil, going back to determining misstatements, we had a question come in, and then the question came in from a different perspective, but this was, I thought, quite useful for people to understand. Takes us a little bit back to webinar 2 as well. In terms of determining misstatements, what happens if scope 3 disclosure is really big item, and then your scope 1 is actually quite small? Then could you actually miss a misstatement in scope 1 because you've based materiality on scope 3?
I guess you could miss a misstatement, which is perhaps why that's not an approach you should take. So I think it's important to understand the users of the information. And if it's going to be that users see scope 1 information as being separate and they take decisions on scope 1 separately, and you're going to be influencing them, then perhaps a materiality over scope 1 and 2 in aggregate isn't the appropriate materiality to apply when performing procedures or evaluating misstatements on scope 1. So I think that would be a key piece. So what's going to impact users? And you then need to be able to aggregate and disaggregate based on how you see users impacted by information. The way that question's phrased is it feels like you should be disaggregating scope 1 from scope 3. Doesn't necessarily say that it'll be the case in every instance, but I think it does feel like it would be in the case that was raised in that question.
Great. Thank you, Neil. Well, we haven't had any more questions come through. So for now, I'm going to say thank you to our panelists. And we've just got a couple of little slides to go through very quickly. First of all, this has been the third, as I said, and final of our webinar in this three-part series covering the foundational principles and concepts, as well as the conduct of the entire sustainability engagement from acceptance or continuance through to reporting. If you did miss webinar 1 or 2, you can watch the recording on our website, and you can actually find them on YouTube as well. We could go to the next slide. Some of you may already be familiar to these, but the links to our resources on our website have been added to the chat in this webinar. So quickly gather those. And again, all of this is on our website. And then if we get to our final slide. Great. So finally, just another thank you to our panelists today and to you for participating and all the great questions that we had. We really do appreciate them. And that's it for our final. Oh, sorry, I think I just got frozen there. And that's it for today. Thank you very much, everybody.